Right, so US dollar. So it's been creeping up into the highs really of that M formation on the 1 hour. Right, so we've got that M formation, the move up, and what we're looking for is a depreciation in the US dollar, which would help the US 30 higher. Right, so we've been looking at this to come up in the Wall Street Open. Um, so if we move to the Well, let's just stay on the 1 hour. As you can see, we're right at the bottom of last week's range, right? So we're looking for a move up if this dollar comes down, if yields behave themselves and fall in line, weighing on the dollar, right? So we've had a spike up. Perhaps that's the high for the day. Could be. That is a thesis, a risk on thesis for the day ahead for the Wall Street session. At least that's what it's starting to look like, right? So if that comes off and the dollar sinks and we get a risk on session, then we can be looking for stronger gold prices, a weaker dollar CAD that's 1, 2, 3 days, so 2 days, 3 days of longs, right? So a pullback into those longs could be on the cards. Euro dollar higher, sterling yen, yeah, sterling yen's sort of down in this support area, last week's range. It's tapped into last month's low as well. So most breakouts fail. You'd expect a pullback. Um, dollar yen, potential peak formation to come back in on the inside of that range that's moving up. Right. So as you can see, if this dollar slides, all of this is looking pretty probable. Right. So Aussie dollar there for a move up rather. Um, No screen. You're joking. Ah, crikey. Bear with me. Ah, dear. Right, we'll start again. Third time lucky. So, back to the dollar. The dollar, we're looking for this to come off, right? So, we were calling that M formation for a move up into resistance. It's broken that resistance, which could act now as support. But if it doesn't, then we're looking at a downside move, right, to take on last week's highs, to move into this upward trend, right? And we need 10-year yields to continue sliding to give us that outcome. Okay. So keep an eye on 10-year yields and the dollar. And if that were to play out, then we are looking at a scenario where we've got the US 30 at the bottom of last week's range. How we know confirmation or dead cat bounce? Well, there's no, I mean, what you'd look for is a break in structure, right? So let's look at this 10-year yield. We can come down now to say a 5 minute chart, and we're going to look at structure of that rally. Okay, we're looking at structure of that rally. Bit tricky on the 10-year because this chart isn't going to give you as much information as we need. It's kind of bitty, you see, but I would say that we've broken structure. This could be regarded as structure, right? So this is now resistance, potential resistance. So long as we stay below there, right, so we can pull back and tail off, then that's sort of confirming the downside, because that then becomes a bearish scenario, right? So we're in a broken down market as per the 5 minute chart in the 10-year. On the dollar, we've got this sort of triple top in place, 1, 2, 3 pushes into the highs. So the thesis is, if this were to break this low here, so I'm just going to clean up the entire chart, and we'll mark that as a key support area. If we get below that, we are technically in a broken down market. So the highs will have been locked in. right? I mean, that's not to say that it can't move back up. Of course it can, but the thesis is bearish, right? Below, so the highs are locked in. We've moved in one, two, three pushes. Potential failing here. We've got an M formation there. You know, we're still a bit away from the Wall Street Open, but we're looking for a slide. Now, if this were to continue higher, then bets are off, right? But so we're looking for a move lower um, in the dollar below 106.70, call it. All right. We've got the US 30 that's low down within last week's range. Well, it's trying to break out of last week's range, isn't it? Once, twice. So there's last week's range. Last month's lows, right? So potentially this could fail and move back on up. And that is more favorable to be buying than the NAS and the S&P, because the NAS is already quite high up in last week's range. That's last week's high, right? So we're already up there, and the S&P is, I think, sort of middle ground of last week's range. So the best value comes from the US 30 in terms of a going long opportunity. And if the dollar were to come off, then we've got gold prices tinkering on the edge of a move higher, finding support at the neckline of the W formation. So prospects of a move up. Dollar CAD looking pretty heavy up here. Prospects of a move lower. Um, what's this? Euro dollar. Euro dollar has, and so is cable. They've given back plenty of ground as the dollar strengthens, right? But we're still technically in a supporting area potentially here, right? So if we do get a move down in the dollar, we'll be looking to break yesterday's closing price again and start building our way back into last week's range. Okay. Get rid of this Fibonacci's for now. So start moving up into sterling yen as well. Down at last week's lows, taking on last month's lows as well. Potential move up. Okay, and dollar yen high up. Potential move into longs. Aussie dollar, potential move up. Cable up, same as euro. And Aussie CAD has already pretty much played out. We were talking about the short in Aussie CAD yesterday, and we've got that price. It's a continuation trade. We talked about that earlier on in the day, and that's played out nicely, coming into a support area. So I think that horse has already bolted, but worth noting anyway. And oil, again, if we get a risk on profile in today's market, then you'd expect oil, which is already sort of playing out as we talked about earlier, to continue rising up in towards that resistance area, trendline resistance, prospects of a move in on the breakout area over here, 90.50-ish. So we can get above that, then we're up towards yesterday's highs again. So that's essentially it. Now, that is all depending, of course, as to whether yields are going to continue dropping and the dollar selling off. If not, if this proves to be, as you said, a dead cat bounce, then we're flipping the script on what we've just gone through. All right, but for me, I'm looking for those setups. If we get the dollar sliding, okay, so that's it pretty much. Don't think there's anything more to add. In terms of the calendar today, we've got Jolts. But where are we in the day? That's coming up in 40 minutes' time. So keep an eye on the Jolts as well. There'll be a focus on Jolts, especially due to there being the jobs reports tomorrow and Friday, non-farm payrolls on Friday. So there could be an emphasis on Jolts data today. And then later on tonight, we've got the RBNZ. But that's going to be in Asia for the New Zealand dollar. Okay, guys, so I'm going to leave it there. And wish you best for the Wall Street Open. We're all into this meeting, so I'm going to go and join that. So it'll be pretty quiet from us for the next hour. All right. So, but you're all more than capable, and we shall see you shortly.